On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Andrew Chubb, welcome to the program.
Thanks very much. Thanks for having me here.
No problem. Look, I was doing the chairing yesterday. You were doing a presentation, and I usually, when I'm doing this, I do a little ranking category. I listen to 12 presentations in the morning whilst we're doing the chairing, and you ranked 9 out of 10, and there was only one other company. There was a lot of 5s and 6s, but I thought, okay, I really like the sound of this.
Right.
Which is why I've asked you to come on today.
That's great.
So we can.
It's very flattering if I got 9 out of 10. Why didn't I get 10 out of 10?
Oh, no one gets 10 out of 10. It's not possible.
Anyway, no worries. Yeah.
No, look, I genuinely though, I thought it seemed like a really compelling opportunity. I was going to go and do a load of research on my own, but I thought, why not bring you on the show and I can just learn from you a bit more. So,
absolutely.
Look, for those not familiar with the show, you haven't been on, or for those not familiar with the story, why don't you just give us a little bit of a brief overview and then we can start diving in.
Yeah, sure. I mean, Awalé Resources is a TSX-V listed company. Our market cap at the moment is around about 60 million. And, you know, from a company perspective, we've got a really tight capital structure. Like we're 100 million shares and 130 million fully diluted. We've got a really good register as well, with, you know, Newmont's on our register, Fortuna Mining's on our register, Franklin Templeton, and down. So we've got excellent institutional support, and it's because we've got a really great project. So the project's in the northwest of Côte d'Ivoire, and we've got 2,500 square kilometres, or just under that. And 1/3 of that is under joint venture with Newmont, where they're funding and we're managing. And that part of that portion of the project is going into, we will have our first mineral resource on that early next year, and then quickly followed by PEA and then through into PFS. So that's really exciting stuff, and we're just launching into what I call the 100% ground, which is that other 1,500 square kilometres that is on trend from all those discoveries that we're going into feasibility on now. So our neurology is our own. We've built our own neurology, which is really cool.
Well, why don't we talk about the JV land with Newmont to begin with? So just talk to us a bit about the mineralization, sort of widths, the grades, etc.
Sure.
What that relationship looks like as well in terms of their earning potential and how the relationship works.
Yep, so they can earn up to 75%. And that's through a minimum $15 million US expenditure and delivery of a 2 million ounce gold resource. So that's what we're drilling towards now. We're doing all that feasibility drilling. We've almost spent the first 15 million, but they're going to continue to fund. So there is a belief that, you know, 2 million ounces is not really a Newmont scale project. No. But there is a belief on both sides that there is scalability to get the project to something that is of interest to someone like Newmont.
Well, they'd need to see, 5 million ounces for it to be...
Yeah, they talk about...
I know that's Barrick's cut off.
No, but that's, I mean, that is that. But then the other conversation around those things is value. So, you know, Charger is spectacular. Like, so the intercept that sent Awalé running last year was 52 meters at 26, I think it was, something like that. So, and
say that again, 52 meters at
26 grams.
Yeah, I think that's why you got the 9.
So it's quite spectacular, and we've drilled holes not quite that spectacular. We kind of shot ourselves in the foot a bit, because that is probably going to be the best hole on that target. Yeah. But we've drilled plenty of other 600 gram meter holes behind that, you know, like 20 meters at 20 and things like that. So
I was going to ask you, what do you think the true width is? Because my main worry when I see grades like that and widths like that, I'm worried that you've just gone through the guts of something.
So we understand the geometry now,
yeah.
And we're drilling at a more optimal direction now, because we think we understand the controls. But the true widths do range from, say, 5 meters to up to 20 to 30 meters. Wow. So it's actually folded.
Yeah.
And so you get zones that are thinner and zones that are fatter within that within that breccia. And so but so I guess the target that we're drilling for at the moment is, Charger is a high grade underground target, and we're looking at drilling the top 400-500 meters for the feasibility for the PEA, and so the target for that is 400,000-500,000 ounces, but at more than 10 grams per ton.
Yeah, a nice margin on that. Yeah, that'd be lovely.
And so that comes back to talking about value. We're doing a lot more exploration on the project because we need to see if it is scalable to Newmont scale. And so if we find another Charger, but bigger, that is an extremely high value proposition. So if you got 1.5-2 million ounces of Charger in one spot, then that would interest Newmont as well, for sure, because it's such a high value. Like you make money hand over foot if the gold price is like $1,000, like when you've got those sorts of grades. So there's it's not just 5 million ounces. It's value as well that I think that the majors look at. They play that close to their chest. I don't know for sure exactly what they're looking for.
How does the earning work in terms of, say for example, Charger is a 1 million ounce deposit?
Yeah.
That you draw that out. Newmont decide, looks great, loads of value there, but not quite the scale that we want.
Yeah.
How does it work in terms of, can you get control back?
Yeah, so we've got a ROFR, right of first refusal. If they don't reach the 75% earn-in, which is the delivery of that 2 million ounce gold.
But that's across all the 3 different licenses,
isn't it, just across those 2 licenses, yeah.
Okay.
Then we have a buyback clause, which is paid $2 million US, and they go to 49% with a straight line dilution. And then if we wanted, we could negotiate to buy that other 49%. And look, I mean, I don't think, if they get to the 75%, we would then have to, and they wanted to walk away, we would negotiate a buyback of the whole thing. And the key thing is that I think Newmont I can't really talk about it too much, but I've got an idea. The valuation would be okay.
Yeah.
And if you benchmark other juniors that have got a couple of million ounces or around 2 million ounces at 2 to 3 grams per ton, these days at the moment, those companies are valued at sort of 400-500 million. Canadian, Aussie, Australian or Aussie dollars. So, we sit in a good position if Newmont decide that it's not of their scale, or it is of their scale, and then, it's a high value project, then, that's a good thing for Awalé to have 25% of as well. So, and if we make a discovery on our 100% ground, now that we're launching into that, there's a bonus, there's a big share price jump in something like that as well. So the outlook's pretty rosy for Awalé, I think.
Yeah.
It's not something I lose sleep about.
Yeah, you've got optionality. What remaining work are Newmont paying for on the JV land? Because like I said, they want to see this resource of 2 million ounces, right?
So they have got to deliver a 2 million ounce gold, or we deliver for them because we're operators. They don't earn their 75% until that 2 million ounces gold is delivered. So they've elected to keep funding toward that. So even though we're nearly at the 15 million, we should be at the 15 million toward the end of this month with all the drilling that we're doing. So they're just going to keep funding, and we don't have to fund.
They must be encouraged by what they're seeing then.
That's right. So there is a belief that the project's got scalability for them.
Yeah.
And so we're doing the feasibility drilling. We're doing a whole heap of discovery drilling as well. So we've got 4 rigs running now. There'll be 5 next week, and then probably up to 6 or 7 into the new year. So it's going to be really, it's already crazy on site, and it's just going to get even more busy. But so project delivery is our main issue right now. But all the team that we've got, myself, Andrew, the chief geologist, John Scott, we've all done feasibilities before. We've all had, 8, 9, 10 rigs running, and so we know what we need to do to make sure that we, deliver on those things, which is.
Yeah, just on that as well. I mean, a lot of people say follow management, see where they've had success before. I mean, what you were talking about a team there. I think I remember you guys have had some decent success in the past. I mean, maybe we should just touch on that.
Yeah, that's right. So my background is been from initially with very early days was with Goldfields out in Kambalda, and then went into consulting and the junior and the junior game. So I've been with a lot of either a high level consultant with some of the bigger consultancies like CSA, RSG, and also in the junior sector. John and Andrew particularly have got more major backgrounds. So they're both spent many years with Randgold. So John is always been very geology focused and was a chief geologist for Randgold. And Andrew was actually the exploration manager for them in Senegal. So he did the feasibility drill out at Moz Au with them. And so, like I said, between us all, we've actually found over 9 million ounces of economic gold. Like it's actually currently being mined or has been mined. It's not just something that isn't actually real. So, it's that experience is invaluable. It really, really is.
And I just want to get my head around the 100% land as well, just quickly. So obviously you've got all of this JV land being worked on, but that's being paid for by Newmont. How much cash in the bank? How much work can you realistically do on your own bit of land? And what is the work program there looking like?
So we've got a budget of 8 million Canadian between now and the end of 2026. So what we're doing we're drilling one target now called Fremen, and then 2 other permits really only just got granted in the last sort of 3 months, like about 3 or 4 months ago. So we're doing target generation on those 2 permits, and we'll be drilling those in the new year. But so we've got 15 million in cash at the moment. Like that's our treasury. Sort of 8 million, like I said, $8 million budget for the next into the end of 2026, and that's enough. That should get us, depending on what drilling we do, 12 to 15,000 meters of drilling, which should be, we hope, enough to make a discovery on the 100% ground.
Well, what early work have you done on the ground? Because obviously going straight into drilling, I'm assuming you've done some.
So the permit that we're drilling, like we optioned that permit from Taraco, and we took up 100% on that about 6 months ago. So we'd been working that up already. So built some really nice geochemistry. So we do a lot of termitaria mound sampling and other geochemistry to build up our drill targets. We've flown aeromag over all the permits, like detailed 100-meter line space, like really beautiful air mag. That's a really good targeting tool for us. And so it was drill ready, so it's sort of gone into that phase. And because Fremen is straight along strike from the BBM discovery, which is one of our main discoveries, it's only 4 kilometers on the same structure. So it's 4 kilometers away on the same structure. So and plus 100 ppb soil anomaly. I mean termitaria anomaly. So it's like a no-brainer to get in and start drilling it. And we've got. In that early drilling, we've seen the right similar alteration to BBM, same geology, and we're getting sniffs. We're getting 15 meters at 0.6, and then within the same drill lines, getting grades of up to 5 grams. So we're getting sniffs on very broad space drilling. So we're going to keep drilling there for sure. And then the other ones, it's the same process. Like we're very systematic about how we do things. And we've actually, in all the discoveries we've made, we've built, an important thing is we've built a lot of IP. So the mineralization style is different. It's not the same as the rest of West Africa. We've got an oxidized intrusion related system to go down a geology hole there. It is on the IOCG sort of spectrum. And so it's a very different thing. And so we've built a lot of IP on what the geochemistry means and how we should be doing our targeting and all that sort of stuff as well. So we're very, very systematic about how we go about it. And so we know that we'll finish those geochem programs toward the end of this year and have drill ready targets, early next year.
Okay, and VBM, that's mineralization is a bit different to Charger, isn't it? It's a bit lower grade, I think.
Yeah, it's lower grade. So we all the discoveries we've made, it's like, I would say it's on a continuum. So it ranges from extremely high grade and gold and low copper, like Charger, through the Sceptre discovery is the grades are more like a copper porphyry. Right. So you get, 0.4%, 0.3, 0.4% copper and then 0.2, 0.3 grams per ton gold, but there's huge scalability on that. And then you go to the high gold end member like Charger, and then we've got something in between like BBM, which is sort of 1 to 1.5 on average in the open pit, 1 to 1.5 grams gold, and 0.4% copper. So the global grade at Empire open pit, we think will be about 1.5 grams gold equivalent, and it's 2/3 gold, 1/3 copper, basically.
But that's in terms of what you're exploring for on your own land, the 100% owned land.
Yeah. So
it's going to be more similar to that 1.5 gram type.
So the Fremen target is like that, but there's no reason why we can't find more charges. So the key thing is that with all that, we can actually sew all those different things on that continuum together because the alteration and mineralization is exactly the same, just you get things in different tenor, like there's different ratios of those metals. So we know that it's all the same plumbing system and fluid flow events, and there's probably a couple of fluid flow events. But that's what big camps are made of. Like if you go and look at other big camps globally, you get these variations in the mineralization, but there's a lot of it in different styles. So if you go to Carias and places like that, it's like that. The Campbell St Ives camp is like that. You get some very high grade gold things, lower grade gold things. It's all like, So it's all part of the same plumbing system, which is an important thing.
This time next year, where do you think you'll be?
This time next year, well, that's the thing. There's so many different options that could come out of this. We'll definitely, we'll be well and truly on the way to publishing a pre-feasibility study toward 2027. I think, from a growth perspective, I think hopefully by then we know whether Newmont's in. And so then we'll get a growth with the idea that, okay, Awalé's moving with Newmont towards a tier 1, and so we get a revaluation based on that. Or we've bought we're in a process of buying the project back from Newmont, and our market cap's 500 million, which would be really great. But I'm excited about 2026.
I think you've got good reason to be. Yeah. No, Andrew, thank you.
Thank you very much for your time. It was good. Nice conversation.